Esteemed members, colleagues, and panelists, good afternoon. Wishing you all a good afternoon and a warm welcome to the Uasa and Dccp Income Protection Cover webinar this afternoon. Uasa, your trusted trade union that has been in existence for well over 128 years, is not only consistently seeking ways to bring value-added products and services, but also focuses on informing and educating our members in respect of current offerings from our accredited service providers that may be of value and benefit to you. This year has seen a drawn-out war between Russia and Ukraine, which was the catalyst for devastating economic consequences worldwide. Emerging market currencies such as our South African rand have tumbled against the greenback. Many countries have slipped into recession. Stock markets worldwide have slumped heavily, and central banks have hiked interest rates significantly in an attempt to rein in runaway inflation. South Africa has been no exception, and the current environment is highly stressful for workers whose purchasing power is quickly eroded by higher prices, higher interest rates, and less disposable income. This does not bode well for the already ailing economy and low growth. On the back of the negative financial impact of the pandemic, unemployment figures are dangerously high and continue to rise. For many workers, retrenchment and companies downsizing or closing doors is a reality close to home that approaches fast. Taking out an insurance product can be complicated, and in many times there are more questions than answers. Taking out income protection is no different. So what is income protection? Simply explained, income protection is an insurance product that supplements your income when you're unable to earn due to illness, injury, or loss of work. Some of the complexities faced when choosing an income protection plan are many insurers will base the amount of cover and the premium on a person's age, pre-existing medical conditions, life choices, and occupational risks. The older you are, if you're a smoker and work in a high-risk environment, potentially are reasons for an especially high premium. Some may require blood tests, medical reports prior to inception. Dreaded diseases often form part of the exclusions. With this background, we've invited Eddie Greef from our trusted and accredited service provider, DCC Credit Protect. Eddie has 24 years of experience in the insurance industry as a specialist and a qualified key individual with the FSCA. He will talk to us on the necessity and the benefits of an income protection plan, especially in these financially uncertain times and in the face of employment challenges that workers are facing globally, and also share with you an income protection product that is available to you, our valuable and trusted members. Whilst Eddie is presenting, feel free to pose any questions you may have in the chat box, and we will also allow for a Q&A session at the end of the presentations. Without any further ado, we welcome Eddie to continue with the presentation. Thank you for joining. Thank you. Over to you, Eddie. Thank you.
Thank you very much, Jock. Asif, Lisa, and the Uasa team. Welcome to everybody, all the attendees and the members. If you're not with us live, hopefully you will enjoy this information session regarding the income protector. Please allow me to just share my screen. And I will start my presentation. Guys, yes, as Jock introduced me, my name is Eddie Greef. I'm the Chief Operating Officer for DC Credit Protect. We are a registered financial services provider, and we've had a long-standing relationship with Uasa, the union, as well as Uasa Financial Services, where we really try and bring products to the members that makes financial sense and that brings value to the members of Uasa. So without further ado, let's jump into the presentation. As Jock mentioned, please, you can open up your chat box and put the questions in there. And once the presentation is done, we will then move over and do a Q&A session at the end. All right. So first of all, I would just like to introduce our partners. You'll see Olivia Financial Services. For those of you who've been, Olivia has been a part of the Uasa service providers for the last 2 years. DC Credit Protect is the administrator of the products that Olivia puts on the table. So effectively, we are the broker that will on-sell these products to you. Right, so just a quick agenda and what we're going to discuss. So first of all, why income protector? Why income protection? What does it cover? And what are the rules of the policy? Okay, so let's start with why income protection. And it's important right off the bat that I explain to you that what Jacques has explained now, that a lot of the times your income protection cover is linked to your age, it's linked to your income, and it's linked to dread diseases, illnesses, risks. We have taken a completely different approach to income protector. And we said that why, if you are earning more, should you be paying more? Okay, and let's give the client the choice of what the client wants to do with his money and how he wants to spend it. So as you all should know, or a lot of you should know, when we introduced Olivia Financial Services, we introduced a product called credit life insurance. So 99% of your credit cards, overdrafts, personal loans have got credit life insurance cover on it, so that if anything happens to you, either retrench, death, disability, your credit life insurance will kick in and it will cover those unsecured loans, such as your credit cards and personal loans. However, what we realized during 2020, when COVID hit us, is that during a retrenchment process, we are only covering your debt with credit life. And how do we now pay school fees? How do we pay medical bills? How do we put fuel and food on the table? And cover all of those daily expenses. And that is really where a income protector comes in. And that is why we developed the assistance income protector to assist our clients to maintain a standard of living and to ensure that you can take care of your financial commitments. So what does our product cover? Our product covers three main sections. First of all, a loss of income due to accident, illness, or temporary disability. So if I go a little bit deeper into the loss of income due to accident, if you're involved in a vehicle accident, for instance, you might injure your leg, you can't go to work, and you need to go for an operation. After the operation, you need to go for rehabilitation. And that whole process could take up to 5 or 6 months for you to recover, rehabilitate, and get back to work. For that period, yes, your employee will cover certain portions of your salary, or you will have to go to UIF. But that would also only be a percentage that you would be covered for. Right. And this assistance income protector then becomes a supplement to the income that you have lost. So loss of income due to accident, illness, or temporary disability will be covered. The second benefit that we offer is loss of income due to unemployment or the inability to earn an income. So a couple of years ago, everybody would talk just about retrenchment cover. Today, it's not just retrenchment cover. Yes, retrenchment cover is still covered, but we've been through a period of COVID. and lockdowns. So you're not being retrenched, but let's take, for instance, a representative that works on commission, that has to go out and has to go and see people and sell a product, very similar to us brokers that have to go and do business, or for instance, a paint salesman. Now, all of a sudden, we're on lockdown. This sales person with selling paint can't get to his clients. The clients are locked down, so they're not able to work. So there's no sales. So now all of a sudden, you've got your basic salary, but you're losing out on your income for commissions earned due to those sales, right? And that now becomes part of a wider description within the loss of income as an inability to earn an income. Okay, so it's not just retrenchment or unemployment, but it is the inability to earn an income. The third thing that we cover is loss of income due to dread diseases. Okay, we cover 9 of the dread diseases, of the major ones, and that includes heart attack, stroke, renal failure, or otherwise called kidney failure, major organ transplant, paraplegia, quadriplegia, blindness, cancer, and coronary artery bypass surgery, or as we know it, a triple bypass or a double bypass heart surgery. So those are the 3 major benefits for you as our potential client. What are the benefits? The benefit pays out to you a monthly income directly to you, the client. We don't pay a credit provider or your credit card. We give you that money. And that money is for you to spend where you see fit. Okay, covering some of the expenses, making sure the school fees are paid, making sure that there's food on the table, making sure there's fuel in your car so that you can get to work, or at least your spouse can get to work and still generate some form of income. That would only not just support your lifestyle and your family's financial security, but will give you peace of mind that your financial expenses will be taken care of. What makes our product unique? And as Jock mentioned earlier, conventional income protectors are often linked to your life cover and medical tests and blood tests and income and age and illness related. And are you a smoker? Are you not a smoker? Our product is very, very easy, very simple, and very straightforward. We do not ask for any medicals, no medical examinations, no blood tests. We ask you one medical question, and that question is, are you aware of any serious illnesses in the last 12 to 24 months? Right. And that medical question is purely so that we can do some form of underwriting to say that if you are currently in a position where you have just been diagnosed with cancer, we possibly won't take you on, or there might be a small loading, or there might be a bit of a waiting period. And this is purely an underwriting thing, and for us as insurers to protect the portfolio. So only that one medical question, not 100 and medical tests as some of our competition in the market. So this product is not linked to your income. Okay, it doesn't matter what your income is. You can choose whatever cover you want. Okay, it is also not dependent on your age. So it doesn't matter whether you are 18 or 55 or 45, your premiums will stay the same. Okay, so it is not a conventional income protector product. And this is what it makes, what makes our product so unique. Okay, so let's quickly talk about premiums and cover provided. We give you 3 options of product. Our first product is 5,000 Rand per month, and this will pay out over 6 months. So 5,000 Rand per month, then a maximum of 30,000 Rand will be paid out. And the retail premium for this product is a very, very affordable 75 Rands per month. Our next level is 10,000 Rand per month for 6 months, a maximum of 60,000 Rand at 110 Rand per month. And our last product is 15,000 Rand for 6 months, so a maximum of up to 90,000 Rand a month at 135 Rand a month. And I'm sure all of you that's attending this or that will see this webinar later will agree with me that these premiums are really well priced and very affordable, to have a supplement income of 15,000 Rand if you are unemployed. And as I mentioned earlier, ladies and gentlemen, if you are currently earning 10,000 Rand a month, nothing stops you from taking the 15,000 Rand a month cover as long as you can afford it. Okay, so that is purely up to you and whether it fits within your budget. There is also, obviously in insurance, there's always a bit of rules of the policy. Okay, so these are the 3 major points. First of all, you must be permanently employed. Okay, now permanently employed, if you look at the definition, it says that you must be employed by a private entity or a state entity on a permanent basis for 20 days or longer in a month. Okay, so unfortunately, if you are a waiter, you would not qualify for this product because you are not considered permanently employed. Okay, so people in the informal sector, and I'm thinking of, let's say, for instance, seasonal farm workers, when it's grape picking time in Cape Town, people would go and work there for 3 or 4 months. This is considered a contract work, and you will unfortunately not qualify for this product. Okay. Also, I must make it clear that self-employed people are also excluded from our product because for a very simple reason that you cannot retrench yourself. Okay. If your business closes because of mismanagement, then that is the owner's job to make sure that his company prevails. And lastly, our minimum entry age is 18 years of old, 18 years of age, and the maximum entry age is 65. Okay, so if you are 64 years, 364 days and 11 hours old, you can still take this product. Right, the product has a cessation age, so the cease age, that's when the product ends, and that is up to 70. Okay, so as soon as you turn 70, this product will automatically cancel, because we believe that at the age of 70, you are ready for retirement and you can go and enjoy your golden days sitting next to the beach, watching the dolphins jump in the water. So those are some of the rules of the policy. Let me just quickly jump over and share our application form with you guys, and I hope you can see this. All right, so this is our application form. So our application form we've sent through to Asif and Lisa. So I'm sure they'll make it available either via snippets or on social media or via email. And this, again, our brochure gives you a very nice breakdown of exactly what the benefits are, what the policy covers, what the benefits are, your premiums, a couple of the rules of the policies, and obviously if you guys are interested to take out this policy with DCCP and Olivia Financial Services, you will be contacted, and the product will be explained to you by one of our qualified representatives. It also gives you a quick explanation of how to claim, where to claim, whether it's a phone call to us or via email to notify us, gives you all of that information. It also gives you a different payment method. So we can do a debit order, we can do EFT, or we even have a pay at facility. If you want to drop into a Checkers or a Pick n Pay and go and pay there, we'll issue you with a pay at number, and you can then contact us or pay us via pay at. Guys, our telephone numbers is on the presentation as well as on the brochure. If you want more information, you can either give the call center a call on our telephone number 012-881-0296, or you can also drop us an email at info@dccp.co.za. Also, we are busy updating our Uasa specific website with all of our new and exciting products, and we hope that this website will be live within the next week, and you can go and get more information and also download the brochures and the application form from the website.
Eddie,
The application,
thank you so much.
Application process is really, really easy, guys, and as I said, there's various ways of contacting us. And I want to go over to some questions. Sorry, Jock, I interrupted you a bit.
Eddie, just a short thank you from my side for the very insightful presentation. And I guess the uniqueness is one of the things that attracted us to yourselves in terms of the product. I see on the Q&A we've got two questions. I don't want to preempt because I think during the presentation you did answer the first question. The first question was, hi Eddie, if a person takes out the policy at 64, does he only get covered up to the age of 65, or is he covered as long as he keeps the policy active? If you could just quickly just recap on that first, please.
Yes, gentlemen, and well, ladies and gentlemen, as I explained previously, the maximum entry age is 65, and the end age of our policy is 70. So if you jump onto the policy at the age of 64, you will have cover up until the age of 70. Right. So up until 10 minutes, 5 minutes, 1 minute before you turn 71, you will still be able to claim on this policy.
Thank you, Eddie. Eddie, and then another question, interesting one. Does a person have to keep up their contributions or their monthly premiums once they claim or whilst they're receiving the benefits?
Yes, absolutely. So there is no waiver of premiums. So you need to continue paying your premiums in order to have cover. Okay. Also, I think it's important just to add there that with our product, you may only claim once per annum. Okay. So if you are retrenched, you can claim up to 6 months, and after that 6 months, you have to wait another 6 months before you can claim again. But yes, on that question, you have to continue paying your premiums. Otherwise, miss one premium, your policy will be suspended. Miss another premium, your policy will be automatically lapsed or cancelled, and you will no longer enjoy cover.
Eddie, thank you for that clarity. I'm not seeing any other further comments or questions. I guess it's my privilege, Eddie, to thank you for your time this afternoon. And I guess it's a challenge for everybody in the country nowadays with the load shedding and the schedules that change with the drop of a pin. But thank you so much for your time this afternoon.